A week ago, China announced a crackdown on the export of the rare earths metals gallium and germanium, two elements used to build computer chips. The export ban will begin on the 1st of August and is part of a tit-for-tat trade war between the world's two largest economies. Australia is the world's third largest producer of rare earths and could be well placed to capitalise.
So rare earths are a collection of about 12 or so minerals that are sort of grouped together as rare earths. And typically we'd see these being used in high technology applications. I think the most notable use itself would be in the magnets that are used for electric vehicles. And as we all know, the penetration rate or adoption rate of electric vehicles is expected to rise materially in the coming decade or so, and that's really brought the focus back to the criticality in the supply chain of these particular rare earth minerals. One notable aspect of the production of this group of elements is that 90% of the supply chain is effectively owned by Chinese companies, both state-owned and private entities. One of the very few rare earth producers that is ex-China is in fact one of our very own Aussie companies, a company called Lynas that are listed on the ASX under LYC. There are a whole range of other companies that are looking to commercialise various deposits in the sort of near and long term. However, rare earths, just by their very nature, are very difficult to extract and process ultimately through the supply chain itself. I think we've seen a really big push from the US over the past few years to really diversify the supply chain globally. So we've seen a whole range of incentives across the board to encourage other forms of non-Chinese rare earth production. And that really does seem to be flowing through into greater exploration and definition of existing resources that have been around for perhaps some time. So I really think that Australia is in a very good place to become a much larger producer of these elements over time.
Yeah, obviously China, big dominant force in the market then, but so is there a really large opportunity here for Australia, both small mining companies and small explorers in the rare earth space, to really expand over the next decade or so?
Yes, absolutely. So Lynas, historically, they have had a global supply chain in the sense of they would mine the Mount Weld deposit, which is located in Western Australia, for ores containing rare earths. They do a bit of preliminary processing locally, and then they would do the end processing in Malaysia. Basically, Lynas are pulling the majority of this process back to Australian shores itself, and we expect that's going to open up opportunities for smaller companies that perhaps may just do the mining and then eventually sell the ores to Lynas in time. But however, it's also important to note that Lynas aren't the only game in town. We also have another sort of, mid-cap miner in Iluka, who are building their own rare earth refinery facilities quite close to Lynas, again in Western Australia, and that effectively is being designed to process these third-party ores, and it's being very well backed by the federal government in addition to the Western Australian government. So to have two competing rare earth processing operations in the same state and very close by to each other, I think that's really going to encourage junior miners and junior explorers to find more of these compounds, and it significantly lowers the bar to commercialization, most importantly, to encourage that greater supply and diversity of supply as well.
And technically it's not a rare earth, but lithium companies, they've really experienced some pretty strong growth, especially on the share market over the past sort of 4 to 5 years. What's your take on the lithium sector? Are you positive about the lithium sector as well?
Yeah, absolutely. I think that the lithium sector has, the whole lithium supply chain itself has had a lot of money thrown at it, with the expectation that electric vehicle penetration amongst, the mainstream society does increase materially. We've seen a lot of projects in the midstream, that is basically converting the upstream products into usable battery materials. The processing capability in that really tells us that over time, the expectation is that electric vehicle penetration, gets to at least 30% over the next decade or so. But however, that building out of, conversion capability in the midstream has really forced up the price of upstream lithium commodities. So just to give you a little bit of context, so over the last 5 years, we've seen a whole range of prices for the spodumene concentrate, which is a pretty standard upstream lithium precursor. So we've seen the price fluctuate from a very low of about $400 a tonne to the current price of about $5,000 a tonne. So really huge swings there. But the high prices that we're seeing and have seen over the past couple of years is really being driven by the fact that there's probably not enough upstream lithium resources that can be sort of converted into battery material, relative to the capacity or processing capacity that is currently online and will come online shortly. So security of supply is really essential, I guess, in the lithium sector itself, and which is why we're seeing a whole range of smaller Australian companies that hold lithium resources being sort of tied up as part of M&A, or definitely the speculation is there for anyone or any particular company that owns a decent size hard rock lithium resource from our observations.
And just really quickly, recently China put export restrictions on 2 of the rare earths, gallium and germanium, used in computer chips and magnets. Is this something that Australia can try and work to its advantage?
Yeah, absolutely. I think that ultimately every time the Chinese government attempt to weaponize the supply of minerals which it holds a very dominant market position in, ultimately all that does is encourage the world to become less reliant, I guess, on Chinese supply. We saw that same situation sort of around 2008 to 2010. That sort of period is when China tried to do the same thing for a multitude of rare earth elements, and that's ultimately why Lynas managed to get its project off the ground and into production. So I think that there's always a silver lining with these things, and we can't obviously say with certainty what the future holds, but one thing I can say for certain is that undertaking measures like this does encourage diversity of supply and alternative forms of supply as well.
Well, Emmanuel Dat, founder of Dat Capital, thanks for coming on the program today.
Thanks, Ed. Thanks for having us.